Well, let's move into the investor talk here a little bit, because I know you brought that up already, a little bit about the returns for investors and various things like that. So first, talk about how did you end up structuring this deal with your investors?
Sure. So that was a whole interesting thing. You try to figure out how the property is going to perform, and then you figure out how does the general partner get fairly compensated while still paying a good return to their investors. So to start at the end, basically over the 6-7 year hold, the LP should get internal rate of return 13 to 13.5 with an average cash on cash return of a little over 7. So that's kind of our target. And I think those are solid numbers given the market. And that was based on a 6% exit cap. So we came in at 5.2. We used 6% as an exit cap, which I think is a defensible position. In terms of the splits and the pref, we're offering a 6% pref. We started at an 85-15 split. At 10% IRR, it goes to 80-20. And at 13% IRR, it goes to 70-30. So we thought it was a solid deal, and we try to, receive ample compensation for doing it, but still kind of provided the returns that the LPs want. And I think we struck a decent medium there.
You basically have 3 hurdles in the waterfall there.
Yes.
Yeah, 3 hurdles in the waterfall. 6% pref. Now, does the pref have a catch-up, a GP catch-up with it, or is it a straight, true preferred return where 100% of the cash flows up to the 6% goes to the investors, and then you start the splits?
It's 100% of the cash flow goes to the investors. So The truth is, as the GP, we're not going to really hit the waterfall until disposition.
Okay.
Pretty much, in broad pictures. So basically, all the cash flow less the asset management fee goes to the LPs.
Okay. All right. And what was the fee structure on this one?
2% acquisition fee, 3% asset management fee, 1% disposition fee.
Okay. Pretty standard. I like it.
Yeah, try to be reasonable.
Sure. No, yeah. I mean, I think I probably would have gone a little bit higher on the acquisition fee because it is a smaller deal, but 2% is fine. 3% AM, maybe 3.5% is what I might have done on this one. 1% disposition fee, I probably would go to 2% just because our disposition fee, and I don't know how yours is structured, Arn, ours is always given as long as we hit a certain return. So as long as we hit a 13 IRR on most of our deals, we'll usually take that disposition fee, but we don't. A lot of groups will take it up front first, and then they'll pay the waterfall. And it just depends on where you take it as to what size of fee you might want to put in there. So
good advice. And it's interesting. Brian and I had the net worth to qualify for this loan, but we didn't have the agency debt experience. So have a mentor of mine as KP. And when we first brought the deal to him, we had the acquisition fee at 1%. And as he was going through the spreadsheet, he just crossed it out and said no 2. So that's what we went with. But I appreciate your comments that on a smaller deal, they could be a little bit higher. And, for me, this is the first real true syndication deal. Brian and I want to do a great job for our investors. This isn't going to be the only deal. And so if we erred at all, I think we try to err on being more than fair with our limited partner investors who we want to. I can tell you, we closed May 13th. Several of them are already saying, when's the next deal? So, and we've talked about this before. It's kind of you learn by getting in the game. And so I think it's important to get in the game, and that's where you really learn. And so I think this was for a lot of reasons, we're very happy with the way this one is working.
And how much capital did you end up raising?
We ended up raising $1.5 million.
And that wasn't including the CapEx? Including
the CapEx and the COVID reserves.
Yes. And how did you go about raising that capital, right? Because, 1.5, seems like a lot to, many people. And then sometimes people look at that and go, that's not that bad on a deal, But, obviously BSP in one of your very first deals, it's obviously a big chunk to try to take down.
Great question. And, to back up a second, you're never sure of your loan proceeds until a week before close or 10 days before close. So, that kind of enters in. Both Brian and I have developed good professional relationships. And so most of our investors already knew us. We ended up having 30 investors, $1.5 million. We had a $25,000 minimum, again, to allow people who are maybe new to the syndication space just to kind of get in. And it's kind of interesting. We had 2 or 3 people come in with very large amounts. We had 3 or 4 kind of come in at the 50 range. And then we had a batch, probably over half at about 25,000. So we ended up with 30, which would average to 50. But I guess the mean would have been more like 25. So most of these were people that we already had prior contact with, though maybe 5 to 10 of the investors were kind of new people that we brought in with our outreach during the marketing. So we had a webinar, we put together an investment summary, and the fundraising came together fairly quickly.
Good.
Yeah.
Good. And what's your plan for managing these investors? I mean, obviously, some people look at this and they go, 30 investors in a deal, like that's a lot of work. So what is your plan to be able to manage these investors?
Okay. So I'll handle the investor relations. So the monthly emails is no problem. We've sent out 2, and that's my responsibility. My partner, Brian, uses Buildium as his property management software. And within Buildium, there is a way to connect it to ACH payments. So we've set it up in Buildium where each of our investors is kind of like a vendor, if that makes sense, like you would pay. And so Buildium will generate the ACH payments. We're going quarterly, so we have to do it 4 times a year. So we're using Buildium, which Brian's very familiar with, and what he uses to pay all his other property management clients. So we did, we investigated a portal. I wasn't sure we were quite ready for that. And ultimately, we just kind of decided to do it ourselves. So in terms of getting the PPM signed and all that, it was good old-fashioned DocuSign, and I would send them out. And I do have a VA who helped with a lot of it, but basically we just kind of used brute force to get it out. And we'll certainly tune up our game as we go on, but we have to do more deals to do that, maybe.
Well, I will tell you that there's nothing wrong with good old DocuSign. So that's how we do it right now, too.
You can template it. And the thing I love about DocuSign is you never lose a document. An organization is not my strong suit. Okay. So fortunately, Brian's OCD. So Brian's my Danny. Okay. So he keeps everything ship-shape while we talk. So that's how it kind of works.
That's good. That's good. Well, can you think of any other issues or things that came out throughout this entire process on this acquisition that we haven't talked on yet that we could probably dive into a little deeper?
No, I'd say it went relatively smoothly. I would say for people who are entering this space, you're going to have some emotional ups and downs. And I know like one day I would be down and Brian would pick me up. And the next day, maybe Brian was down and I'd pick him up. So the other thing, I'm in my mid 60s, Brian's in his mid 40s. And about 3 days after close, Brian goes to me, because we closed on a Thursday. I talked to him Monday after. He goes, "Man, I'm exhausted." He goes, "I slept all Saturday." So the other thing I would just say is it takes a lot of effort to get these things done, and it's a lot of work. But what I would say, it's totally rewarding, and it just kind of whet our appetite to find another one. So that's kind of what I'm on now. Had a great KP, somebody that I developed a relationship over the last year, and his advice and counsel helped, and certainly his name recognition within the agency community helped. And they even kind of asked, why is this guy messing with such a small deal? And so we kind of went through. I just didn't pick him up out of the phone book and pay him. We had an existing relationship. So I think it's important to develop a relationship with one of your key principals ahead of time and build that relationship too.
Yes, totally agree. Totally agree. Well, that's great advice, Arn. Thank you so much for all the content during this episode. I know there's going to be a lot of value packed into this little short episode here.